The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the May 14th terrific Thursday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to an extraordinary start of your day. Let's make sure that you and I do everything we can to get every ounce of energy out of it. Of course, let's always remember what's talked about is a dream. What's envisioned is darn right exciting. What's planned becomes possible. What's scheduled, though, that is real. And I want to thank you for scheduling your time with me this morning. I'm honored by your presence here today. I'm here to serve you. Feel free to pick up that phone and dial on it at 877-927-6648. Or internationally, you can reach out to us at 727-445-1044. Remember, if you've got a question, thousands of others have got that exact same question. Just think, your random act of kindness could be helping thousands of others out there. So feel free to dial on in on this terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 150 points, trading out at 18,210. S&P up 13 points, trading at 2112. We've got the composite up 33 points at 5,015. The Russell 2000 up 3.5 points at 1235. The DAX is up 144 points. The FTSE's up 15. Gold is up $6. Silver's up 17 pennies. Light sweet crude is flat out here, trading at $60.51. Leading the charge, the upside, it is ctrip.com, up 14%, up $9.55. Nettie's up 6.5%, up $8.50. Shire PLC up $5. Middleby Corp up $5. Google's up about $5. Shake Shack's up about $5. McKesson Corp's up about $4. Amazon's up about $3. Humana's up about $3 as well. To the downside, Puma Biotech off $36. Buckarooni's down 17%. Coal's off $8. That's 10% to the downside. Dillard's joining in, and it looks like in a sympathy trade off 3%. Jack in the Box, back in the box, down $3.50. Vista Outdoors down $3. Target off about $3. Digital Ally off $2.40. Harley Davidson down a couple of bucks. Okay, let's go check out these markets out here. The Dow is on fire. Let's go check out what's going on inside the diamonds. Let's go take a look at it. Let's look at the ETF structures, get a feel for what's going on. Now, we know that the Dow has been pushing into the swing point from March the 3rd. It's been pushing in there with volume for quite a while. It pushed in there with volume back on April 16th, as an example. Pushed in there with volume on April 27th. Pushed in there and closed inside with volume on May 8th. Pushed in there with volume and rejected on May the 11th. Pushed in there yesterday with volume with 3.8 billion shares versus the 3.2 million shares. So now that says that high of 182.68 ought to be tested inside of the Dow. Volume-wise so far today, 1.2 million shares, which is pretty good going after a swing that's only got 3.2 million shares out there. That high should be tested. I don't know if it's going to be today, but it should be tested, especially if the DIA can close inside that swing point. Let's go see what's going on inside of the QQQ series ETF out here. It's trading up slightly. $108.92 is what it's trading at. We've seen 4.7 million shares trade thus far this morning. Where could this be headed to? Let's just take a look at retracements here. Let's look at retracements from the top to the bottom out here. We can see that the Q's likely next target is going to be 109.19. You're at 108.91 as we speak right now. 109.19 is your 0.618 retracement level out here. That is a likely a targeted price point. What else do we see? We see just a slight open window. That's just a tad lower than that. That's at the little downdraft session between the days of the low of May 5th and the high of, the low of May 4th and the high of May 5th. So that seems like another potential resistance zone. If there is resistance inside of the Qs, that would be where resistance is at. If it does not find resistance there, then 110.04 would be the next level where price would travel to. That's inside the QQQ ETF series. Let's go take a look at the IWM, the Russell 2000. The IWM out here has really found no energy to even break above or get above or even test other than one single day, which was on May the 11th, the actual downdraft session from the high of April 30th. 123.44 is the level you want to be watching, and or 123.63, which is the bottom of the April 29th level. If, in fact, the IWM could close above 123.63, that would be strong like bull. Now, not really strong like bull, but strong enough to get rid of a resistance level and say that price could then move up to the next area, which could be 125.66. That's what's going on inside of the IWM. If we go take a look at these SPYs out here, up $1.52, one of the other ETFs that was pushing into the swing point with volume. The swing point I'm referring to is back on February 25th. That had 73 million shares out there. We have already seen a test of that high with 79 million shares. Guess what? It says price is going to go back up there. Now that's what we're seeing. The swing point has a bottom of 211.22. We're trading at 211.57. It has a top of 212.24. It could be the 212.24 that gets tested, and or it could be that key reversal session from April 27th at 212.48 that gets tested. As long as price stays inside the 211.22, it should likely go test any one of those. Volume so far, 17 million shares, not too shabby for 44 minutes of trading out there. That is what's going on inside of the 4 ETFs for the indices out here. Let's check on the liquidity gauges. Let's go see if we've got confirmation of that. We've got the euro Japanese yen. It's kind of saying, I'm not so sure about this because it's struggling to get above its most recent swing point for May 7th at 135.99. It's trading below it. It's tested it. It's made well, it hasn't done anything really to speak of. It's just simply trying to take out that swing and trying to stay above the 0.382 retracement level. We'll know by the end of the day if the move in the markets is real, because that move in the euro Japanese yen should also be real. The euro US dollar, what's putting the weakness inside the US dollar index? It's this pair right here. It's this currency pair, the euro versus the US dollar, just simply because of its weighting structure. Now what are we looking at? Price has gotten above that descending price channel. If price is unable to stay above this level today and get back below it, it says that there was no breakout. What does that mean? Well, it means that one of two things could take place. Price could continue to then head lower because it could not break out of this descending price channel. If that's the case, that's going to put strength inside the U.S. dollar index out there. Now, it's going to have a competing component, which is going to be the Great British Pound, because the Great British Pound has a confirmed A to B equals CD move to the upside, and it's got higher to go. The pound moving higher puts weakness in the U.S. dollar index. The euro, if it moves higher, that would also put weakness in it. But if the euro runs into resistance at this level and starts moving lower, lower could be just coming back to the most recent lows out here on May 11th, or it could be coming to a much lower price out there. We don't know. We just know that we've got a breakout that is going on inside of the euro, so we know what to be watching for. Here, by the way, is that Great British Pound again as we take a look at it. Confirmed A to B equals CD. This is 8 days in a row to the upside. That's a little bit unordinary. Another way of looking at it is just how strong that Great British Pound is versus the U.S. dollar. 160 becoming its next target area. If we look at gold, gold's up $7, trading at $12.25. The key level to be watching inside gold, my opinion, is the $12.24 mark out here. Any close above that, and then what you could have is an A to B equals CD to the upside inside of Goldilocks. That A to B equals CD would look like this. It would give you a price projection. Hopefully you're watching on Tiger TV at 1250.50. So any close above 12 and a quarter says we ought to see 1250, another $25 higher, perhaps higher than that as well, but at least another $25 higher. That's what's going on inside of gold. In the case of silver, she's already made the 1 to 1.272 A to B equals CD to the upside, on its way to the 1 to 1.6 area. That is $17.65. That is trading right now at $17.38. In the case of light sweet crude, as we take a look at it, it's back 13 pennies right now. Not a big deal. Pulling back this morning, pulling back where? Into the bottom of the rising price channel out here. It has been struggling as of late, ever since it put in that little shooting star candle out here, but price still continuing to motor on higher and stay inside its rising price channel. The exact opposite of what we looked at when we took a look at the euro U.S. dollar index, which has a descending price channel, but it has broken out of it. So we covered all of that. Let's take a quick peek here at what's going on inside the VIX index. Inside the VIX index, we're trading at 1283 as we speak right now. You know, the most recent low that we had out here was 1270. That was on May the 8th. Kind of interesting that the VIX is not, well, let's see, the low is so far today, 1280. Has not even been able to take that low out there. Something to think about. Nonetheless, the VIX is trading below the 50-day exponential moving average. That's a positive liquidity gauge, just as with the Euro-Japanese yen moving higher. These are the reasons that we are seeing the U.S. stock market move higher. The liquidity gauges are on a full tilt boogie out here as we speak. If we take a look at the summation index, if we take a look at the price oscillators inside the New York Stock Exchange, it's above zero. That is a positive thing. What does that mean? Well, it means that buyers are in control as we speak right now. This indicator only has real meaning when we get to the 4 p.m. Session. When we get to 4 p.m., the question is going to be, is it still above zero? If it is, then that says that price goes and tries to maybe take out the high from April 27th. It's trading inside that swing point, that high 11,248.99. If we take a look at the NASDAQ composite, its price oscillator as well above zero. If it can stay above zero today, then what that actually says is there's no reason that the composite will not make its way up into the April 27th swing point. And I don't know that it just makes it to 5,053. I would say more likely goes ahead and makes it to 5119, maybe even higher out there. And that's what its message would be if it can stay above the zero line today. If it fails, well, then we just simply have another failed test of a resistance level. We will not know until 3:59 with 59 seconds left to go in the trading session out here. In the case of the Dow, though, right now, it's actually making higher highs when we take a look at its price oscillator as it's moving into that swing point. That's actually pretty good. Can the Dow lift all of the other markets higher out here? I suppose it can. Dow's up 159, S&P's up 15. We'll be right back, folks. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 157, S&P 15, Composite 40, Russell's up 6 points out there. Let's go take a look at some of these. So we covered the currencies. We covered gold, silver. We covered the ETF. Now let's go take a look at the internals inside the S&P 500. Let's take a look at the XLK out here, up 50 cents, 1.7 million shares. Let's go see what it is doing. So in the case of the XLK, its most recent swing point was from April 28th. There was 9 million shares out there. We've done 1.7 million shares in the first hour of trading. You know, volume-wise, that's pretty good. Again, I don't know what it correlates over the next 5 hours of trading out here, 5.5 hours of trading, but so far volume's pretty good. You know, and as long as, and let's see, what did it do yesterday? That's probably the important thing. So the XLK, the bottom of the swing point was tested. That had 9 million shares. Yesterday was a test with 9.3 million shares. So that says that the high ought to be tested out here. Now, any close above 43.46 with more than 6.8 million shares, that would actually set up an A to B equals C to the upside. But you got that 9 million share day from April 28th. So we're going to make it more difficult for the technology sector, the XLK, to complete an A to B equals C. It's got to close above 43.55, do with more than 9.1 million shares, at least to confirm that price move. If we look at the XLF, the financial sector inside the S&P 500, right now this has been, in essence, really consolidating. The consolidation pattern out here from anywhere from 24.77 to a low of 23.82. You're trading right now at 24.76 out here. The swing point of 24.77 has volume of 47 million shares. You've done 4 million shares. Well, 4 million shares times 6 is only 24. So the XLF, it does not have the volume to take out that swing point. So it's really at the top of its consolidation out here. That is its message. I don't expect that we will see it take out 24.77, at least not take it out with any kind of volume out there. That's what's going on in it. The healthcare sector, XLV, that is trading right now at 73.77. Seems to have run out of energy here. And what is it doing? Really just trading with inside its market profiles out here. That's the best we can say. And that 73.77 becomes resistance for it. We look at the XLY, the consumer discretionary sector. It's up 6 pennies this morning. That's trading out at 75.70. This has been consolidating up at its highs. It's been consolidating, quite frankly, since about February the 12th. So a fairly decent consolidation period out here. Support really down at the lows of March 11th. 74.25. We're well away from that 75. 71 is where it's currently trading at. The consumer staples area, XLP. That's moving to the upside out here. It's actually got more strength in the consumer discretionary area. That's kind of an interesting thing. That's typically in markets that move higher, it is the discretionary that outpaces the staples. And this morning, look, one trading day does not make anything out here, but I can say that this morning the staples are outperforming the consumer discretionary area. So that's got to make us say, something to think about. You know, if you're asking me what's the market doing here, I've really been shouting this message here for a while, and you're probably tired of me shouting it. I've been sharing it. I haven't been shouting it, right? I've just simply been sharing it. And I've been sharing that the market is doing, this was when the markets were moving lower. I'm kind of like, whoa, time out here. Don't get too exuberant to any one side of this market, because this is all that it's doing. This is what it has done for 82 solid years. Now, there are some years where it hasn't done this, but on average, this is what it does in the month of May. You got to at least start out with average, right? We don't want average results, you and I. We do not want average results. You know, if you're looking for average results, you're gonna end up with what? I'm not even gonna. It begins with S, but I'm not gonna say that word. You know. Sloppy. No, that wasn't the word. But here's what the market's doing. So the market moving higher today, you know, it's really just in this little consolidation area out here. It's doing what it normally does in May. No different than nearly every January, folks. The market moves lower. Remember when the market was moving? This was after, you know, a decent year, right? And remember when the market started moving lower in January out here, and everybody was like, okay, that's it. You know, like the first 3 days of January, or the first week of January, and all that other hodgepodge crap. Because that's all that it really is crap out there. The reality is the market was supposed to move lower in the month of January. That's just its normal pattern behavior. In the month of May, that old sell in May crap, okay, is just what it is. You know, I'm just showing you what the Dow does on an 82-year average out here. You know, it doesn't fall off the planet come May 1st. Are there years when it has? Of course, you know, it has. But does it do it on average? No. You know, so you got to pay attention to at least the law of averages out there, because that can assist us in our trading and investing. Right now, the Dow's up 153. S&P is up 15. Just as if the Dow were down 150 points, I'd be saying, just hold on. Hold on to your horses out here. The real roller coaster ride has not begun just yet, but it will. This is Steve with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Multitasking going on here during the next break. Hopefully I'll get enough time to update a chart. There's a tool that I use. I was referring to the consumer discretionary and staples area. So I'll see if I'd love to be able to truly multitask and speak and do this stuff over on the side. So I'll try to use that time period during the next break, see if I can update a chart for you that we'll take a look at. If I can, I can. And if I can't, so be it. Then it was meant to take a look at perhaps tomorrow. Let's see. So let's go take a look at, in this long segment here, a 10-minute segment, let's go take a look at, I just want to make sure I've covered everything here. We looked at, so we looked at sectors inside the S&P. We looked at the ETF structures. We looked at seasonally what takes place. That way nobody gets too out of sorts out here with the markets, up and down out there. They're just doing what they have done traditionally. And so if you know that, then you don't have to get, too out of place out there. So let's go take a look at some individual stocks. Let's see if we can take a look at some things we haven't looked at here during the morning so far. How about Harley Davidson? Let's go take a look at the hog, down $2 out here. So Harley Davidson, woof, this thing has been in a decided downtrend. In fact, today could be forming a confirmed A to B equals CD to the downside, fairly large. The B point on this is a swing from October 15th. 3.2 million shares. You've done 3.2 million shares already today. Let's put this on a weekly just to clean it up out here for you. And we'll see if the weekly has volume as well. It's just going to be easier to see the A to B equals CD down pattern out here. Okay, so the weekly swing point is the week that began October 13th. That had 13 million shares. Now you've done 8 million shares. Today is Thursday, but it has already done, what did I say on the daily basis? Today it's already done 3 million shares. Okay, so you've got some excess, pretty good volume today. On a weekly basis, it's got to do 13 million 8. It could easily do it. Yeah, so you could potentially have what kind of horse crap is that? Look, if you have more than 13 million shares to the downside at the end of the week, then you've got a confirmed A to B equals CD on both the daily and the weekly out there. That's really the way to say it. You don't want anybody to show up without conviction here, do you? I hope not. And that would give you a price point of $50.50 out here is where price would head to. So not too bad. Let's go in at 50-50. What that really says is that you come back in this key reversal week that was from 2013. So the weekend that began June 24, 2013, that low is 49.15. You have to say more likely than not, that is really where Harley Davidson is going to head to. Now at 49.13, is that a buy out there? Well, it actually would become a Gartley buy on a weekly basis. And if I look at Harley Davidson, the last Gartley buy on a weekly basis took place back here in July of 2012. Since then, there has been no such a thing. So if you were looking to get into a Harley Davidson, the hog, you're going to be looking at somewhere around a price point of 49.15 to 50, 51, somewhere in that range out there. You're going to have some resistance, though. I suppose you're going to have resistance. Yeah, you're going to have resistance on the way back up. Should it head back up somewhere between $55 and $61.83? That is on hog Harley Davidson. Let's see, what else have we not looked at here? Let's look at Make My Trip Limited. Make My Trip Limited. MMYT is the ticker symbol. That is down today 11% off, $2.56 out here. This is still the weekly time frame that we have inside of this equity. What is it doing? It's coming back to, this thing really has some support right around this area where it's trading at right now. Maybe a bit lower, maybe down around the price point of 1906. Let's go see what it's doing on this daily time frame out here. Oof, that is a nasty looking candle. So this thing maybe was out in the earnings here, opened up and has sold off ever since. Make My Trip Limited Moritis. I'm not even sure what that means out there, but okay, yeah, so here's the breakout inside this equity. So it's trading below where it gapped up, and that says that it needs to hold this level of support. So really the daily and the weekly kind of confirm that this $19 area may hold as support inside of that equity. That's to the downside. We haven't looked at Dillard's. We know that Target Kohl's was trading to the downside. Let's go take a look at Dillard's. DDS is the tip. Well, maybe they were out with numbers too. Let me see. Are they out with numbers? To report. Now, they haven't reported them yet, so they looks like maybe they're going to report them later on tonight. But Dillard's out here did have a little bit of a breakout. This was a breakout party. I don't know if you were invited to it. It was down at the price point of 122.18. That's where prices pulled back to. The volume on that trading session was 1.6 million shares. It's pulled back with 246,000. So it's pulling back into that level with some light volume. It's kind of like it doesn't really know what to do out here. In the case of Dillard's, if this area fails as support, then what Dillard's will likely do is run towards the 111.09 to 107.25 area. In fact, I'd say that 111.09 is a pretty good spot because on the trading day of February 2nd, low was 111.55, and that was a little hammer candle that had formed at that swing point on that day. So that's where Dillard's DDS ought to find support if it disappoints on earnings this evening. I don't know if it's this evening or not, but whenever the earnings report comes out. Let's see, to the upside out here, we got the Kiwis moving to the upside. QIWI, that's up about 10% here this morning. Kiwi announces acquisition of Contact and Rapida. What is this terms? To issue. So they're going to issue 5.5 million Class B shares. Okay, let's take a look at what this equity is doing out here. QIWE is the ticker symbol. Where is this going to run into any kind of problems out here? Certainly it's a change in trend to the downside change. We can see that trend line just simply coming back here to June of 2014. So that trend line most certainly was broken through with some. It was a conviction, no, but was that trend broken? That trend was broken right here on the trading day of March the 25th out here. Now you've got a second A to B equals CD to the upside pattern. The first one was like this. The first one inside this equity, here's your A to B equals CD pattern that had formed and completed, and then it went ahead and pulled back or traded sideways. There's your 1-to-1, pulls back. Now you've got your second one. Your second one is underway right now. Your A point down here on March the 12th, your B point up here on April 16th, and your C point on April 21st. 1-to-1 says 33.55 is the price target. I would say more likely 35.87 inside ticker symbol QIWI. We've got Blueprint Medicines up 13%. That's up $3.50. No reason to really take a study this chart. This is an IPO from just a few days ago, back on April the 30th. No way for me to give you any information other than everybody in this is glad about that IPO because they're well inside the money out here, trading out at $29.60. Just looking for anything that we haven't looked at here as of late, and the answer is no. Shake Shack, that's up 5%, up $3.93 out here. Shake Shack trying to take out its swing point high from May the 6th. Okay, so, I mean, there's other things moving. Let's go take a look at some of the other. Let's go take a look at some of the Dow stocks. Let's do that. That would make sense to go take a look at the Dow stocks. So let me find my Dow page. Dow 30. There we go. So let's open this up. Let's get a feel for, so we've got 100% of the Dow stocks are to the upside. Largest percentage-wise to the upside is going to be, percentage-wise is going to be Microsoft is up 2%, DuPont is up 2%, United Health up, and I'm rounding in this case here, up nearly 2%. Apple's up 1.5%, Boeing's up 1.5%, Chevron's up $1. The weakest of them all is General Electric. Let's go look at the General Electric stock chart out here. Let's start with what the weak stock is. Ever since GE spun off this one of its entities back here on April the 10th, it's been tough for me to go ahead and use that correlation chart of GE versus the Dow, just because you got a little change. So unfortunately, I can't use that to get a real feel. I personally can't use that to get a real feel, because GE, and it will come back into play out here. GE, it should come back into play. GE has had this unique ability to forecast what the Dow wanted to do in advance of the Dow, either to move up or to move down, and because it's had its tentacles in so many different things out here. But at this stage here, I can't really use that, but I was interested to see what the stock chart is actually doing out here, and it's not doing much. To be quite honest, but I don't know that that really has any kind of meaning. Let's take a look at Microsoft, see what it's doing out here. It's up 2%. Microsoft having gapped up with nice volume back here on April 24th. That volume behind that move, by the way, was 130 million shares. Looks like Microsoft is going to go test its swing point from April 30th out in the 49.54, 48.60 area. Let's look at Apple. Let's go see what Apple is doing, which is just really nothing, right? Just consolidating sideways out here for the most part. Still, I don't see it doing a whole lot. Volume behind the move, 16 million shares. Most recent swing point had 50 million shares. But it's not even testing that area, which was back on May the 4th. Let's take a look at DuPont, DD, being the ticker symbol out there. We take a look at DuPont. That's trading down into the swing point. It tested yesterday the swing here from April 22nd. That had 5.7 million shares. You got below with volume 33 million shares out there. So now we've got a complicated A to B equals CD down to the downside pattern out here because we're trading back above that B point from April the 22nd, and that is inside of DuPont. United Health, that's up nearly 2%, up $2 right now. This, again, it's a daily chart we're looking at. In the case of United Health, let's pull this back. What has it really done since it made its high back here on the trading day of March 30th? Not a whole heck of a lot. Not really a whole heck of a lot. That looks mean and nasty. Really, all it did was it just came back to a little breakout area back here, which was pretty clear. This was back on January 22nd, as well as follow through on February 20th and 23rd. So United Health has some pretty decent support there. Let's look at IBM. Let me find IBM out here. Where's IBM? IBM is up $1.51. Let's go see what IBM is doing. IBM coming off of that bottom pretty well. This was having been trash. It's trading inside this gap out here. You can easily make the case what IBM wants to do is try to make a run for the bottom of that gap out here where it really broke down. And that's up at the 180.22 mark. It's trading at 173.82. Let's take a look at ExxonMobil wasn't doing a whole lot, but let's look at Chevron. Where's Chevron? CVX. There we go. Chevron's up 1%, up $1.20. Let's see what Chevron is doing out here. Chevron came into its swing point recently from February 17th. That had 7 million shares. You were moving in with light volume, 6 million shares. Looks like Chevron here, as we take a look at this stock chart, that Chevron I don't have I can't tell you what Chevron wants to do. What it's doing, it's testing the bottom of its TAS market profile low, the old support level, which it broke through, which should become resistance and is right now, which is 109.11. If, in fact, Chevron can close above 109.11, then it goes ahead and makes another run for the hills, for the highs out there. So everything inside the Dow other than GE is to the upside out there, and that's why we are seeing the summation index certainly making higher highs out here. And, you got the New York Stock Exchange and the NASDAQ Composite also above the zero line, pretty well above the zero line. In fact, if we take a look at net advancing issues as we speak here this morning, you're at 1790 or so. You've got winners outpacing decliners by a level of about almost 5 to 1. We're going to call it 4.5 to 1. So that's a pretty good market breadth inside of the New York Stock Exchange as we speak right now. Okay, so I've run out of stuff to cover for you. What do you guys want me to look at? Anybody can throw something out there? I mean, what have I not taken a look at? Gold stocks. I haven't taken a look at gold stocks, right? So let's go take a look at some of those, see what we have going on at the gold slumber party. You've got Rand Gold is up about 86 cents, 245,000 shares behind its move out here. It's running into its swing point from April 29th that had 1 million shares. You're 245,000 shares. So you're into that swing point with a similar type volume. Suggests it goes and tests 78.90 out there. That is on ticker symbol GOLD. Let's take a look at Gold Corp. GG is the ticker symbol. She's up 55 cents on 3.5 million shares out there. This is, again, going to make another attempt for the pièce de résistance, and that's between 2063 and 2046. And that, if you are trading inside the GDX or any of the ETFs associated with the minor ETFs out there, you'll really want to see Gold Corp close above $20.46 out there. Hey, one stock is not going to pull it down on its own, but really you just have a consolidation right now inside of ticker symbol GG. Barrick Gold, strong like bull, up 21 cents. It's got volume behind a move of 3.6 million shares out here. She is trading into the swing from April 29th. That has got 15 million shares. You're in it with volume, 3.6 million shares so far this morning. Dow's up 153. S&P's up 15. The Composite's up 41 points. Russell's up 7.5. You got the DAX up 174. The FTSE's up 20. Gold's up 6. Silver is up 17 pennies. This is Steve Rhodes with TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Folks, Dow's up 158, S&P is up 15, Composites up 43. So Steve Osan here worked his little magic during that break. So let's go take a look. And I'll be working my magic again this evening when I share with folks the invisible tools that really help to shape us as individuals, but they really are influencing factors on why we make the decisions that we make. And really, each of us need to understand this. It does not matter how successful you are or aren't out there. Each of us are always, I've found, like if you're not growing, you're what? You're dying out there. So it means we're always trying to grow. And I know that's why you turn into TFNN. If there's any one thing I know about the listener base out here is that you guys are all about growth, and you're about contributing, and you're all about being a force for good. And so it's really important to understand the different forces in the world that shape you. And it's really all about you. You sometimes during the workshops you'll hear me say, turn your mirrors into windows. Sometimes people don't know what I mean. That means there's really only one thing that gets in the way of you being able to attain everything you want in life, and that's why I say turn your mirror into a window. Step right through it, as opposed to just continue to look into it. Look, let me show you a mirror into a window out here. Let me show you it's a pretty cool tool. Now, it's not a perfect tool. There's no perfect tool that I have found out here, but this is a tool worth paying attention to, especially with us being up at the highs. I mentioned when we were taking a look at the XLY and the XLP earlier. Now, look, this chart is not until the day's over. The data that I put in here was as of 10:40 or something like that. So at the end of the day, it could be totally different out here. Now, if you look, and I want you to really watch the bottom. Let's do this here. Let's watch the. Now you can. The top of the screen was the S&P. Now I got to do it both ways for you. Here, the bottom screen is the ratio of the consumer discretionary to the consumer staples, and the red squiggly line going across my screen out here is the 50-day moving average. As I blow it up right now, you can see that as we speak right now, that has just dipped below just dip below the 50-day exponential moving average line out there. Now, as I say, it's an imperfect tool out here, but what it does tell us about is the market. And if you go back, I'm going to go back further just so you can really take a look at it and understand the kind of the nuance behind here. When the market was making its highs back in 2007. No, I'm not calling for a market that's made its highs and it's going down. Okay, well, let's just take a look at it from the perspective of what happens when price is above and below the 50-day exponential moving average, much like you and I do with regard to the VIX index out here. So go back to 2007, and in 2007, right around July 20th, 21st or so, we saw that ratio start to really drop below the 50-day exponential moving average out here. In fact, we started to see the market move lower as well. So the market can start to also move to the downside when you're getting out, when you're going into more of the defensive type names and stocks out there. What was interesting here was that the market went ahead and made a slightly higher high back on October the 11th out there. It was October 12th or October 11th. I think it was the 11th when the market made its final high out there. But you know what I'm referring to. But take a look at what was going on inside that ratio. The 50-day continued to deflect it out here. And obviously then we started to see the market, continue to trade lower. We've seen when the price gets above that, we've seen where the market has stabilized at times. So it is an indicator to be paying attention to. And the reality is that, like I say, it's not a perfect indicator out here, but when you can catch this up towards these highs, it's worth noting out here. And we can see that when we see cracks of that go back in 2010, they call it about the flash crash or what have you. But the reality was we started to see this tool. We started to see where the staples were outpacing the discretionary with regard to its ratio in the 50-day exponential moving average. And so the meaning behind it, as I say, not a perfect tool, but you can see back here, back in the May 2012 time frame, when that tool got below that level, the market started its move lower out there. So just something to think about, just like everything else. I tell you what I'm going to think about. I'm going to think about riding the Chapman wave during this next segment. So stay tuned. Basil Chapman will be up next. It is Thursday. That means we got Larry Pesavento, Darryl Martin, David White, the Tom O'Brien Show, and Andy Heck to take us home. Have a great Thursday, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.